Looking at the Markets with David Modell.
Welcome to Looking at the Markets with David Modell. I've got a frequent return guest today. He is Mr. Seth Golden. He is in charge of the Golden Capital portfolio, which has had, well, really impressive returns. That's all I can say. We're talking about doubling your money in some years. Okay, so he's one of my favorite guests to have on, and today we're going to be discussing. Yes, we'll talk about the short volatility product trade that is so popular, but we're going to start also by discussing retail, because that is another area of expertise for Mr. Golden. What's the retail picture? What's the overall picture for JCPenney's, Macy's, and just overall? Are we long? Are we short? Should we be cutting back? And what's the outlook for 2017, 2018? So, Mr. Seth Golden, welcome back to Looking at the Markets.
Thank you so much, David. This is really great opportunity to be here, talk to your guests, because we've had a lot of headlines just from Friday to this morning regarding retailers. So fantastic opportunity, and hopefully we have a lot of information to share. Sure,
it's been intense. Just today alone, I'll look at it really quickly. JCPenney's today down 8%. Macy's down a little bit over 4%. All of retail got hit today, and it's not even an earnings day for these companies. All right, so some big moves. So now let's get into the latest news on this. Last Friday, JCPenney announced a really, really bad quarter, or pre-announced a really, really bad quarter, and lowered guidance for the full year. So what's your take with the stock JCPenney now in the $2 range? And what's the end game here for investors?
Okay, yeah, I like how you frame that. So stock, for a long time now, since it was $8 a share last year, has been a no-touch for me. And, in most of my articles since then, and there's probably a dozen articles that I've written since 2016 on JCPenney, basically, kind of weighing the value proposition of all these number of initiatives that they put forth, with the potential to show some incremental improvement in same-store sales and earnings. My thesis has basically been, don't touch it until you see that these initiatives are bearing fruit. And I like the initiatives. I've said many times, I think they're doing the right things, but doing the right things and actually, being rewarded for those right things takes a long, long time. Doing appliances, adding more Sephora shops to your stores, doing Empire flooring and HVAC systems, having whole toy departments in their stores. All of these things are the right thing to do. You're giving your customers more in one shopping location than most retailers are, and making the most of your retail square footage. But along with that comes, the headwinds or the challenges, such as, well, appliances don't have, very good margins. So they're margin decretive. You still have double-digit growth in your online sales. Well, that's also margin dilutive. And those are really, big initiatives for them. Closing all the unprofitable stores, while the right thing to do, long term, that's never been a positive for a retailer. In many senses, once you start closing stores, you never stop until, unfortunately, you reach bankruptcy. I'm hoping that's not the case. I'm hoping that JCPenney is actually the one that is doing all the right initiatives while closing stores and meets an equilibrium. But again, I don't invest based on hope, so I wouldn't be in the stock. But for investors that have been holding on, I guess what I would say is, maybe draw a line in the sand. If it breaks this point, that's it for me. You can't go any further. And there's always other opportunities out there. Look, if Macy's is falling, somebody's picking up something. So yeah, for me, it's a no touch. I don't The results have been consistently poor from the day Marvin Ellison took over for the company. I think he's missed 7 out of the last 8 quarters. And you just lose trust from the investor base when that happens. You just lose all the trust. And to some extent, he's being honest with investors on the conference calls. He said during the last conference call, we're overhauling the women's category because the sell-through rate is poor. Our sales in there are down double digits, so we're overhauling it. And that's what they reiterated on that pre-announcement was, they basically had to liquidate a lot of, merchandise and just do severe markdowns to get rid of it. So he told us, on one hand, what they were going to be doing, but on the other hand, he didn't, in his guidance, he didn't forecast for this. So it's a half-truth, if you will, in my opinion. So, I hope they do better. I'm a frequent shopper. I hold a JCPenney credit card, but we'll see.
Yeah, it's one thing to shop there. It's another to invest in a company that has store closings, liquidations. That's probably, like you say, a no-touch type of situation if you're considering a new position, especially a long position in JCPenney. I totally understand that. Do you envision this JCPenney situation possibly spreading to the entire retail department sector?
It's an ongoing problem. Spreading has been a problem over I would say the last 3-4 years where e-commerce sales have just reached a point where brick and mortar sales are just being siphoned. It's kind of like having one full cup of water and the other one is not full. And the one full cup is the brick and mortar, and it's just pouring their sales into the e-commerce cup. This has been going on for a number of years now, and I can't foresee a future where online sales aren't growing at the expense of brick and mortar sales. No, I don't see this, abating anytime soon. You may reach a point in between online sales and brick and mortar where brick and mortar has rationalized their footprint to where they can grow profitably at least through the generating of consistent cash flow. So they're always doing this game of, well, we can buy back shares, it'll increase our earnings. That helps the stock sometimes, but then there's the argument against that, which is retailers are valued on sales. They have not been valued against earnings for almost 3 years now. So when people start, they're like, oh, the price to earnings multiple has been, at its lowest level. That's because nobody's pricing these things to earnings at this point. They see that Amazon is doing, or the e-commerce space, it's sales. And if they're going to siphon off all your sales eventually, no matter what you do financially, to engineer profits, the long-term picture is still the same. Sales. They're either there or they're not. So, a lot of people, like Macy's, they can sell real estate assets and that'll give it a better valuation. No matter who's put that, no matter how many assets they have sold, they're still going to be valued on their sales because that is the core business.
Yeah. Sales is the bottom line. And if it's not a pretty picture, then why get involved? Why be a hero? That's what I always say. Yes. Now, I remember back in January of 2016, almost 2 years ago now, you wrote an article on Macy's. This is in Seeking Alpha, and I'm going to put a link to that article in the description. Check that below the video. You actually warned investors about how flawed, you believed at that time the real estate to be when offered by Starboard investors, and you just gave an overall warning about retail in general. So what do you consider, if anything, to be the best of breed in the retail department sector?
Best in breed, so brick and mortar, I would have to say is Walmart. Their size, strength, balance sheet, it gives them an opportunity to do so many things. If they want to dive into e-commerce in a big way, like they did with the Jet.com acquisition, they can, and it won't affect their balance sheet. Target is another good one, but Target can't do what Walmart can do. Otherwise, they should have bought a big brand e-commerce play years ago as well. So, I mean, if we just look at it from that lens, balance sheet, the ability to meander through this really challenging retail environment, it has to be Walmart. Would I be a buyer of Walmart stock up here? Probably not, but that doesn't mean they're not the best in breed. So I'd say Walmart, followed by, the likes of Target, if, we're talking department stores, but, there's other categories of retail, but for this conversation, yeah, Walmart.
So if somebody feels absolutely compelled, if they must invest in brick and mortar retail, Walmart, maybe Target, but really not any of these sound like a compelling buy right now at these valuations.
You're going to get into a battleground stock if you do anything beyond the likes of a Target or a Walmart. You're in a battleground stock. If it's not being realized today, you better believe it's probably going to be realized going out into 2018, 2019, and so on. So,
yeah, gotcha. All right. So, bottom line, what we're seeing now, and based on everything you've said so far, is this the death of retail? I mean, can we look forward to any good news on the horizon?
Momentary good news, so they can beat a quarter if they lower the bar, low enough. Target's done a really good job of that this year. They lowered the bar so much so that in Q3 they, raised it some, and Target's, kind of riding the sales of of 2 consecutive quarterly beats off of those really low numbers, but. No, I mean, there's no death of retail, but dying can be equally as uncomfortable as death. So, this will go on for years and years. In the media uses the term death. It's a lot of hyperbole, but they're definitely, dying or decaying because you're closing stores, you're losing sales. This can go on for years and years at shareholders' expense. While these companies continue to try and do this and do that and, make these tiny acquisitions that don't amount to much, the dying is painful, but there's not really death. We're always going to want to, go out of our house, and shop somewhere or dine at a restaurant. But not as much as we used to. We just don't have to.
Yeah. All right. So not necessarily death, but definitely decay and deterioration. And speaking of decay and deterioration, how's that for a transition? Let's talk about VIX products, shall we?
Sure.
An ever-popular topic. Ever since you were featured in an article in the New York Times, you've become semi-famous, shall I say, for making...
Some people think of me as infamous. I think Zero might think of me as infamous.
And you've been featured in other media outlets as well for your... I'll brag for you, even if you're humble. Your amazing results year after year when it comes to shorting volatility products, ETPs, exchange-traded products. The most common ones being UVXY, TVIX, VXX, and so on. Now, something a little scary, though, happened for people who like to short these products, and I want to get your feelings on this. The VIX spiked above 12, and it hasn't been there in a while. What do you think caused that spike, and did you have to change your strategy at all as a result of that?
That was last week, like midweek. I think it did touch 13 or even just about. I may be wrong, but what caused that? it's hard to pinpoint one thing. I do, look at a variety of metrics and market indicators and things of that nature. And last week we did have the 10-year yield tick above 2.4 for the first time in a little while. And that is brushing up against a December rate hike, which most people are expecting, and a new Fed chairperson possibly being announced this week. But and that's kind of what you heard on whether it was CNBC or Fox News is, oh my gosh, here's the 10-year yield up above 2.40 for the first time in a while. So markets pulled back a little bit from all-time highs again, and it served to spike the VIX itself, which sent the likes of UVXY and TVIX and VXX, all went up pretty sharply, that day. It subsequently crashed, since then. But it's important for folks who are participating in the volatility complex. You're asking a perfect question. Why did it spike? And that's why I like to look at everything regarding the macroeconomic climate. And what I recognized, and which was somewhat validated on CNBC all that day and the following day, is the 10-year yield. And it's correlated a lot in the past as well. I tweet on Twitter, when it was this high in the past, I had informed people, keep watching the 10-year yield, because as it was rising, the VIX was rising. And that's not to say that the VIX will always correlate to the 10-year. It'll correlate to whatever it wants for as long as it wants before it finds something else to react to. So.
Yeah. And by the way, you talked about tweeting. I should mention, and I will mention again, people, you need to be following Seth Golden on Twitter. His handle is @SethCL. And on StockTwits.com, the popular message board, which is a lot like Twitter for financial people, stocks and options traders. And on StockTwits.com, Seth Golden has the handle of @SethMarcus. And that's on your screen right now and in the description. Now, I wanted to talk more about shorting these volatility products, UVXY, TVIX, VXX. Yep. Some people might try to simplify the process. They might say, you know what, every time UVXY goes up 5, 8, 10% in a day, I'm just going to short it and I'll be fine. Well, that might work some of the time, but you prefer to have greater reward with less risk. What are some of the things you look at? And I'm going to mention some of them and tell me if I'm right or wrong. I'm thinking that you're looking at contango. I'm thinking for the VIX itself, for VIX futures. I'm thinking you're looking at roll yield. I'm thinking you're looking at the macro environment. How's the economy doing? How are corporate earnings doing? I think you're looking at that. And today you mentioned you're looking at treasury yields because they have an effect on how people feel in terms of fear and greed. Are you looking at all those things, and how do you synthesize that? How do you put it all together?
Yeah, absolutely. Time. It's definitely taken time just to familiarize myself with all of those variables, and to know what to have on my screen at all times. I have tabs open on all of my screens, so that I can see them in real time or as quickly as they do update. VIX futures don't update, very quickly. But that it's just, I've become accustomed to this methodology whereby I know what to look at and what's important, what's relevant. So like you said, there's a lot of strategies out there nowadays for folks that desire to or continue to short volatility. But this year has been a really unusual year. I've been shorting volatility for, it'll be 6 years now. And this year has been one of those years which hasn't existed largely in the past, where you haven't had a 3% pullback in the market. The VIX on average may be below 15 this year. This hasn't happened before. So, yeah, you could have short, if it goes up 8%, you could have short, no problem. That may not be the case next year or in 2019 or 2020. So to answer your, if there's the question, why do I look at all those things? It's because I want to short with a degree of comfort, and knowledge, because next year it may not be the same situation. This year's been really easy. Anybody who's come in, no matter when, and shorted, the VIX ETPs, UVXY or TVIX, as long as they held on to it, they've made good money. That may not be the case next year. Next year, they may short and have to hold it for a week or 2 weeks or a month or 2 months. You never know. But, that's why I look at all these different variables, because I want to know. And I want to have a comfort level whereby if it goes up 8%, I know how much I'm going to short, just in case it goes up another 8% on top of that, so on and so forth. So, what I've been expressing, lately in my tweets and on Twitter, I've been trying to open people up to, that looking at the different metrics, looking at VIX futures, at the CBOE, and, having that on your screen during the day. And you use that so that you can look at M1 and M2, the different monthly futures VIX futures contracts. So M1, let's take example M1, and M1, is trading today. The last price $11.58. Well, what does that mean, Seth? Doesn't mean anything in and of itself for VIX ETPs. But if you're trading them, you juxtapose the $11.58 price on the M1 futures contract with the VIX spot price itself. And VIX spot right now is $10.50. So you've got $1.08, roll yield is what we call it. You have a gap there. And typically, as we get closer and closer to that VIX futures contract expiration date, it has to compress and fill that gap. And that's where your money is. So there's people that don't even play these instruments until they get closer to the expiry dates. But knowing the gap there, knowing the roll yield, the difference between the VIX futures M1 and the spot, gives you a good degree of comfort that you're still in good territory. And that's represented in contango as well. You're still on the right side of the trade so far as your short position. If you've got a nice, gap there between M1 and spot VIX, because the closer we get to expiry, the decay is going to ramp up. The decay in the UVXY price or the TVIX price. So.
Gotcha. So you want a nice, healthy difference between the VIX spot price, what it's selling for now,
and M1.
And M1, meaning a month. Or the next month's VIX futures, which is going to cost more, because that's how it is. There's a cost to store these. It's hard to imagine. I always imagine like a storage unit, but storing these VIX futures, there's a cost to carry it and hold on to it. So you want a nice healthy difference between spot price and M1, and also I think you would want a nice healthy difference between M1 and M2. And so on and so forth, and that's and so people who go along UVXY TVIX, they're continuously holding something that requires the fund to sell,
buy and sell low.
Sell the current month's VIX product, and then buy a more expensive. They're selling low and buying high, because these things expire every month. Am I correct in my thinking here?
100%, sir.
Okay. Yep. If a dummy like me can understand it, then you're doing great. Okay, gotcha. Wow, this is really exciting. I'm going to continue my journey. I'm going to continue my journey to learn how to trade these VIX products correctly. I'm going to try to refine it the way you've been doing it. And I hope that people are checking out your tweets, which are free, by the way, free education, and also on StockTwits, and your articles on seekingalpha.com, talkmarkets.com. Look for Seth Golden on those, and I'm going to keep retweeting them as well. Also, speaking of Twitter, I saw you had an announcement regarding all these resources. It's about phenomgroup.com. Am I pronouncing it correctly? And what's that all about?
Yes. A little while back, I had announced that I would be launching a website come December. The website's still being constructed. It's going to be a financial, news, media-based website with subscriptions for traders and investors, all kinds of research and daily news articles. There's going to be a ton of information and a ton of sharing with regards to VIX trading and the VIX complex, because that is a specialty of mine. But I've been on Twitter and on StockTwits for the last year, trying, educating to the best of my ability, folks out there. But this is going to be, give everybody, one collective place to get all that information, to get at me, as they say, where I'm going to be participating. I'm going to be delivering my trades, my research articles, and all of that sort. So we should be launching in December. We are only going to accept, during that period, 1,000 subscribers. We'll have a free subscription as well as a paid subscription. But, one of the goals here, besides just the educational dissemination, is creating jobs. I'd love to have the site be successful whereby I can employ other research analysts and article writers. There's going to be the opportunity for bloggers to participate with their own articles and thoughts on the website, as well as a chat room, kind of like StockTwits, where people can engage each other and share their ideas and thoughts. And all that costs money. So hopefully, people will find it of great value. Any persons that are interested, because that's where my trades are going to be. That's where I'm going to be. If you're interested, please feel free to contact me directly, so we can put you on the VIP list. Because again, we are going to be somewhat, having an exclusive launch, and I'll make sure that I have the names that will be delivered the appropriate communication, so that they can go ahead and sign up if they so choose.
Absolutely. And the way to get in on this, and again, there is limited participation, so you want to let Mr. Seth Golden know as soon as possible that you are interested in this, if you are. And given Golden Capital Portfolio's returns over the past number of years, I can't imagine why you wouldn't want to participate in those returns. They've been extraordinary. The email address that you're going to see it on your screen right now, and also in the description of the video below, seth.golden@coolingsit.com, COOLINXIT.com. Shoot him an email. He's very accessible, very responsive. And once again, check him out on seekingalpha.com for his articles, his frequent articles, talkmarkets.com, and elsewhere. On Twitter @SethCL, on StockTwits @SethMarcus. Did I leave anything out, Seth Golden?
No, but if I could, just maybe briefly just say one more thing.
Sure.
On the VIX participation,
yes,
and the VIX complex. We see a lot of headlines every single week, and the headlines seem to ramp up when volatility ramps up. And my name gets pushed out there more often than not in these headline articles, like the one from Zero Hedge last week. Because I seem to be somewhat of a public figure, and I don't shy away from that spotlight, if you will. But there is some well pointed risk aversion in those articles. and some prudent planning, should be gleaned from it. The short VIX trade is a highly profitable one. It's a highly successful one, but it's not one that should be entered into lightly without a basis of knowledge or resources around an individual trader. And it's one of the things that why I've been participating on Twitter so frequently over the last year, is because it had become so popular, and I saw people going into shorting or even long these products, not really knowing, their composition or how they interact or correlate in the market, or with what they correlate. Take those, hyperbole generated articles from Zero Hedge and the like with a grain of salt, but also recognize that I think what they try to get across is be careful, know what you're doing, have the right resources, because if you don't, what they are positioning in the media can happen to you, and nobody wants that situation. So
I totally agree, sir. Shorting a VIX product, shorting UVXY, which is leveraged, TVIX leveraged product, VXX not leveraged, but still, shorting these products is not like buying and holding Coca-Cola or McDonald's or something like that.
Correct.
It's risky. You have to know what you're doing. Don't do this unless you've been educated and you have enough capital to be able to handle unexpected events. So, and you have to have a certain amount of risk tolerance as well, also known as the iron stomach that I always talk about. So, once again, the website, it's under construction right now, phenomgroup.com, but you're still welcome to check it out, phenomgroup.com. Hey, why not take a look at it? And it's not going to be under construction for much longer. You're going to start to see some content on there, and you're going to want to get involved.
Yeah, we're going to start doing beta testing in November. For folks that have frequented Seeking Alpha and Talk Markets and even StockTwits over the year, we're constructing the site to kind of give you the best of all worlds. And sure, it takes time for us to generate content and what have you, but Seeking Alpha is a great site to read articles, maybe place a comment, but you don't get a lot of interaction. StockTwits is a great site for interaction. You can't really read articles there. You can be linked to them. So what we're hoping with Phenom Group is that it kind of brings the best of both of those worlds. And so far as chat rooms, it will be moderated. No bad languages.
It won't be a free-for-all. It'll be for educational purposes. I like it. All right, I'm excited about phenomgroup.com. So check it out, put in your bookmarks, and keep checking back as they work on it and fill it out. Meanwhile, contact seth.golden@coolingsit.com. Maybe you want to get in on this. Maybe you want to be a subscriber. Can't say I blame you. So you want to contact him because it's limited openings right now. At SethCL on Twitter, at Seth Markets on StockTwits.com. Seth Golden, I enjoy having you here. It's always an easy conversation. You always make it so so easy for me, and I really appreciate that. So you're welcome back here anytime on Looking at the Markets.
Thank you, David. Everybody have a fantastic day.
Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.